Weakness has set into the corn market here about midway through the session, and as we get closer to the back half of the trading day, we've still got that weakness over here in the corn market, anywhere from 1 to 1.25 cents, even 1.5 cents lower. September down 1.25, 364. December down 1.5, 378.25. The rest of those contracts all the way out to July, 1.5 cents lower all the way across the board. Soybean market, it's got weakness of its own. September down 9.5, 876. November down 9.5, 887.5. January, March, and May, they're also lower by 8.75 to 9.25 cents. But the wheat market is kind of separating itself from the rest of the grain. September Chicago wheat up 15.75 at 558. July up 6 at 594.5. September Kansas City wheat up 15.5 at 563. July up 7.25 at 615.5. September Minneapolis wheat up 12.75 at 609. July up 9.25. It's trading at 650. The December cotton contract is down 47 at 81.33. Let's go to the edge of the trading floor for an in-depth look at all of this. And joining us now, Scott Gecas. He is with Longleaf Trading. They're at the edge of the trading floor at the CME Group in Chicago. Well, first of all, let's lead off here with the soybeans. First of all, Scott, what are you hearing there on the trade floor?
There's a lot of different catalysts going on with soybeans in particular. Right now it's setting up, it's a perfect bearish storm for soybeans. So you had that China news come out yesterday and you've seen that big spike up. But what people are not talking about today, and I can't believe they're not talking about it, is China's still buying oil from Iran. So with that being said, they're going to get hit with more sanctions from the U.S., and that's definitely a bearish tone for soybeans. World ending stocks are 106 million. Usage is record highs of about 30%. You know, that is very detrimental to soybeans, even with that big catalyst yesterday with the China news. But what they're not taking in account of is if China keeps buying oil from Iran, they're going to get hit with more sanctions. So that's going to come off really quick.
All right, that's a pretty insightful point there. Oh, what do you make of this wheat market, though? It's kind of on the other side of this whole scenario.
Yeah, the wheat market, it's a very odd dynamic just because it's going straight up. And there's a lot of bullish catalysts out there because there's a rumor that Russia's going to put restrictions on exports coming out of Russia. If that happens, I mean, we're already at a shortage of wheat just globally. Global production is lower. So if that happens, it's going to be even less supply, more demand, and that's going to drive prices quite a bit higher. We could see prices roughly around maybe the $7 to $8 range by the end of the year if this keeps going forward like this.
All right. Scott Gecas here with us at the edge of the trading floor. And when we come back, Scott and I'll be talking about the livestock market. Please join us here on the Marketing Report. All right, let's go to the live cattle market here. This market has been on both sides of unchanged today. We've had a couple of reversals throughout the course of the trade here on this Friday. We're at that front month of August is up 20 right now at 108.52. October up 54 at 109.82. December up 38 at 113.58. February up 4 at 116.92. The cash cattle trade has gotten off to another slow start this week, and now it looks like the bulk of the trade will have to be done yet this afternoon. We've got very, very light volume. Asking prices still 112 to 114 in the south, 178 in the north. The Packers still bidding 108 in the south, and a few 173s in the north. And that 173 is basically where we did trade a few Iowa cattle. Over on the feeder cattle side of the market today, we've got the August down 28 at 150 even. September up 33, 150.45. October feeder cattle, they're 33 higher also, and only a dime away from the September 150.55, and November's at 150.45. So kind of a narrow range here for the front four contracts of trading within each other. Then when we go to the hog market, well, October is up $1.12 at 56.60. December up $1.02 at 53.47. February up 40 at 59.75, and April's up 12 at 65.82. Let's bring back Scott Gecas. He's at the edge of the trading floor. Scott, over here in the protein complex, let's start here first. You're there on the trading floor. What are most traders talking about today when it comes to either the hogs or the cattle?
Well, the cattle, it's weird because they have over expected demand for just beef going into Labor Day. So that's one of the things that's driving cattle prices. But the biggest thing that we're looking at in the protein complex is the hog market. So I've been on for the last 2 weeks saying that if anything positive comes out of China, all the people are going to have their fingers on the button. And that's exactly what happened yesterday. We went to limit up at about 11 o'clock. This is one of the rare instances I could get to say I told you so. But when they went limit up and they got halted, you got to remember that the options still trade. So the 55 line traded about 325, which is going to represent about 58.25 in the futures. I'm surprised they're not limit up today. This China news is very big for them, where it's going to be offset by if China keeps buying oil from Iran. But because they have such a big problem with their pork industry over in China with the swine flu or the African swine fever, that's limiting their pork just all across the board. So they're going to have to buy U.S. pork no matter what. And also, what another catalyst is, we're expecting something positive out of NAFTA any minute now. With the Mexican president being sworn in on the 21st, he's already came out verbally, publicly, and said he's looking for something to get done with NAFTA before that date. So we're just waiting to hear. We're waiting on the news. I'm really surprised that the hog markets aren't already limit up already.
When we look at a hog chart, then, and if you take into consideration the technicals side of this, will it matter if we get both of these agreements and get some more of this news, do you think?
Well, when all this happens with the technical charts, you can throw it out the window, only because they've been beaten up so much. I mean, trading 55, I mean, it shouldn't be priced there. So any positive news, any resistance, it's just going to blow through it like it did yesterday.
Okay, Scott, thank you very much for the insight and the look into what is moving all of this. Scott Gecas, Longleaf Trading, there at the edge of the trading floor in Chicago.